Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right, guys, welcome back to another live stream. And again, shout out to FX2 Funding for helping us out here on the show. Of course, we rely on sponsors to make these shows possible. Between all the different guests we bring on, the research that goes into it, the level of quality that the producers bring to the channel, we appreciate our sponsors. And we appreciate, of course, you guys as an audience for allowing us to have this awesome show and kind of funded by the community, essentially. Anyways, we've got an interesting day here to kick off the day. We did have, hold on, give me a second to get my calendar set up here. We had ADP numbers come out, and they were, in fact, higher than expected. So we had ADP non-farm employment change came out at 164,000. Compared to the forecasted 120. Now, what is it about ADP? Why is it not as important as NFP? We'll get into that here in just a second. It's the estimated change in the number of employed people during the previous month, excluding the farming industry and government. So it's almost like an attempt at being a lead indicator of NFP. The problem, however, is that it is has been very, very inaccurate recently compared to what the actual number comes out to be. That's why I wouldn't say it's the most important figure. However, markets will sometimes still react. And we are still seeing, yet again, it seems, another tough day on Wall Street. We see the NASDAQ down here. The Dow is holding its own here on the 1 hour chart. Take a look at gold here as well. Gold is trading kind of sideways here recently. Hourly chart coming in a little bit weak. You've got silver here up next. Silver can't seem to find a low here. Just struggling to sit here just under 23. Oil is up and bouncing back here hard as we speak. Dollar index still looks very, very strong off the hourly chart. The euro dollar overall weak, a little bit of strength coming in here, but overall still very weak. Same thing with the pound. Pound seeing a little bit of a revival, but again, dollar seems strong right now. Here's dollar yen. Look at dollar yen right now, guys. Dollar yen flying high. The Australian dollar dropping like a rock off of this strength in the US dollar we're seeing. And more specifically, I'd like to point out that why is the Australian dollar seemingly the laggard of the group? Well, here's one thing to consider. Stocks are dropping. And if you trade the Australian dollar, it's probably worth mentioning that the Australian dollar oftentimes will benefit or not benefit. What's the opposite of benefit? Like be hurt by the indices, right? I got to sneeze. Excuse me. Hopefully that didn't explode someone's headphones. Anyways, the Australian dollar typically moves, not always, but it oftentimes does move in line with the indices. So when the indices are really struggling, the Australian dollar oftentimes will pull up or down with it. Why is that? Well, the Australian dollar is more of an emerging market compared to, the big one, right? The US and Europe and UK. And so oftentimes emerging parts of the world or up and coming parts of the world will often trade a little bit with the indices. It's definitely something that you should understand. It's also why, sometimes people will be like, oh, I don't like when you talk about the indices, or I don't like when you talk about the dollar so much, or yields. Sometimes I'll get those comments. I'll get comments and be like, hey, can we move on and just talk about this chart? And I'm like, if you stick around, a lot of you guys who are here every day, you watch every stream, you watch every video, you fully understand that when I'm talking about one market, I'm talking about all of them. And most true analysts, that's what they're doing, is when they talk about a particular market in reference to the whole, it's like one big pie, and each one of these markets makes up pieces of the same pie. Right. So this is a horribly drawn pie, but you get the point. Like this might be gold, and this might be the S&P, and this might be the dollar. Right. But the point is that you can't have a complete view of the pie unless you put all the pieces together. It's kind of like a puzzle. Maybe a puzzle is a better analogy there. But we talk about that frequently. It is important when you're watching these sorts of videos or trying to do analysis on the markets. Look, I don't really trade the Australian dollar that often. I don't really trade the dollar against the Canadian dollar that often. I don't even trade oil that frequently, but I very much understand the importance of looking at those charts to understand the clues or signals that they may be generating for other areas that I do trade. If that makes sense, type yes in the chat. Again, there is not a part of the content that I, when I'm writing up what I'm going to say in my videos, or planning something for a stream or something, there's no market that I analyze that I find unvaluable to the whole picture. All of it I find valuable to the overall idea behind the analysis, right? Analysis is a complete view. It's not an isolated view. I don't think that you can only understand what's going on with gold without understanding what's going on with the dollar and perhaps what the stock market's doing. Like, I think you need to understand what's the drivers behind these markets. If you're going to be a fundamentalist, you have to be a fundamentalist of generally the whole market. Anyways, guys, we've got a lot to cover here today. Tomorrow is a really big day on the stream. We will be doing NFP live here at 8:15 a.m. US Eastern. That will be in about 24 hours, same time as today. I just want to remind you, if you are just tuning in, if this is your first time and this sort of content would be helpful to you on a regular basis, make sure to hit the thumbs up button, but also make sure to subscribe so that you can come back for more content in the future. Currently, we're still getting, let me make sure I get the latest updated algo outputs from the EDGEFINDER. What we can see here is that Bitcoin's still bullish, oil, the Dow, oil popped onto the chart. Let's take a look at oil in a moment. Oil getting a bullish signal. That's actually in some ways potentially a bearish signal for the indices. If you know, you know, but the idea is that if oil catches a run to the upside, here's the thing to be concerned about. That ticks inflation higher, right? If everybody's paying more at the gas pumps, that trickles down into the rest of the economy if it stays high for a prolonged period. If everybody has to pay more at the gas pumps, guess what suffers? Airline tickets, services and manufacturing and all the different shopping outlets might take a hit, right? That's why the oil market dropping by like 20% from its highs has been really good for the stock market rally. If that unwinds itself, it could actually tug the stock market down further, which are already looking pretty rough right now. We talked about that earlier. Gold is getting a neutral, but it's hovering just below and almost near a bullish signal for me. So I'm going to continue to watch gold here. NASDAQ, same thing. It's back down to neutral. This got pumped back down. I imagine what actually changed from yesterday? I imagine some of the trend became less bullish. I would say, take a look at the chart here. It uses daily candles, and the daily chart is starting to really reverse here. However, I just want to say on the indices, I am sounding bearish today, but I am not actually a bear. So let me clarify. I am still very much a NASDAQ and S&P bull, but I've said this before. This is why I'm a trader. This is why I'm not primarily an investor. I would say the closest thing I become to an investor is I'm an active investor or mostly a trader. What I mean by that is that, I bought the NASDAQ on the breakout of this kind of downward trajectory. I bought it and I'm not the NASDAQ, I'm sorry, the S&P, but the NASDAQ moved with it. I bought that break and I held that thing all the way up to about right here. I got trailed out and took my profits. Now the markets are unwinding. I'm still bullish. However, I think this is why I am a trader. I think that something can get overdone and you can wait for another opportunity to get back into that market. If I'm just an investor, I buy it. If you bought it a couple of years back, this is where you can kind of play devil's advocate with investors. If you had just bought it over here, you are still just barely you're just barely in the red after, years of holding at this point. Well, 2 years of holding almost. Point is, this is why I think you can carve out some more profitability if you are indeed actually a good trader. Anyways, looking for a deeper pullback on the NASDAQ before looking for possible buy opportunities. That goes the same for the Dow and the S&P 500. However, the Dow is outperforming right now, believe it or not. We're seeing the Dow stay strong. What is this? Why? Safety. The Dow has much more safe stocks in it on average than perhaps tech stocks, which can be heavily piled into the NASDAQ. So we're seeing the NASDAQ take a hit. Meanwhile, the Dow is doing okay because the Dow, the US 30, has more big names in it. It's a safer collection of stocks than you would say perhaps NASDAQ, which has more tech-heavy companies, which have higher valuations but higher growth potential in good environments. Breaking news. I'm sorry, I'm not going to... Well, actually, I think we already had the breaking news, right? Nope, unemployment claims. We do have something. Thank you for the heads up. Producers are always there for me. Thank you, guys. We got unemployment claims coming in. Let's see if we get anything exciting here to follow what was a hotter than expected. There it is. So better than expected unemployment claims, better than expected estimates for NFP, essentially. And what we see here is that NASDAQ doesn't like that. Dollar index, paring some losses here. The dollar index, for those of you who watch it, here's a daily chart view. I did a full breakdown. I'm excited to get this out to you guys. Last night, I did a full deep dive on the dollar index. And if you're somebody who trades current, I think the dollar, I say this often, the dollar is like the core to my analysis. Even though I don't trade DXY, I do trade currencies, I trade gold, and I trade indices on kind of rotation. And the dollar index is at the center of all of it, in my view. The dollar index popping up here is definitely a little bit of pressure on the stock market world. We see yields popping higher with this dollar rally. However, I'm still a bear, and I'm looking for signs that bearishness is the right place to be right now. I'd like to see this thing kind of fizzle out. We're seeing a little bit of rejection, but we could probably take it down to the 4-hour chart to see what's going on. So again, you've got some levels of resistance. You can see that same level we saw on the daily chart. As long as that kind of holds and we actually start to break down, then that's great. However, it's seeming like it's got a little bit more strength than a lot of people are expecting, including myself. I thought we would have rejected by now. However, here's your 4-hour chart demand. We've found support seemingly, and I will be transparent. If this level breaks, then I have to put a pin in it temporarily on my dollar bearishness from a price action standpoint. Fundamentally, I'm still a bear, but from a technical perspective, if we break this out, that's another higher high, right? Let's call it for what it is. I'm willing enough to call myself out when I'm wrong about something, and I'm a dollar bear. So if this holds, then great. But if it doesn't, then I have to say, hey, you know what? I'm a little early to this idea. Let me step back. Let me take a stop loss if I need to. I don't actually have any trades open right now. I have a couple on the watch list. And heads up, if I do take any trades, you guys will see them inside of our Discord channel. If you're somebody who is not already in the Discord channel, you get access to all the trade alerts being shared by Frank. You can see he's looking at gold. We trade currencies, commodities, indices, but you can see my trades, Frank's trades, who joins the stream sometimes, Ivan as well. We're sharing our analysis, insights. Ivan does coaching webinars. It's a ton of value packed into single membership. If you'd like to get involved, if you're newer to trading, if you're looking to improve as a trader, if you're looking to take it to a new level in 2024, take it more seriously, consider joining us to get access to those signals, coaching webinars, chat rooms, etc. We'll drop a link here for you in the chat. If that's something you'd like to do, then please feel free to send us a direct message on our website. We have a few people who can help you out with getting a membership if you send us a direct message here. So there you go. Yeah, dollar index looks strong overall right now on the 4-hour. What I'd like to see as a bear would be failure at this level, right? I want to see this thing struggle to hold a support level. Right now, we're not getting that. So there's not any sort of immediate bearish signals here for me on the dollar, right? There's gold struggling yet again. Take a look at this, guys. And now we have what seems to be a little bit of rejection coming in here. Here is the gold. We're looking at a 4-hour chart, by the way, guys. And a big slide here yesterday, right? Boom, dropped down, retested. I'm sorry, retested yesterday, dropped before that. And seemingly finding resistance. Candlestick, guys and girls, you might call this a tweezer top potentially. I don't get too fancy with my candlestick patterns. Honestly, if you guys cannot already tell, my technical analysis side is very, very simplistic on purpose. I think you can get all fancy with technical analysis, but I think it becomes chart art pretty quickly. And I lean more towards the fundamentals when it comes to actually picking directional bias on assets. We mentioned oil, where I'm getting a little bit of a bullish signal here today. I want to go take a look at that together with you guys. So let's pull up oil for a moment. So from a oil perspective, we've been choppy, and I don't love this chart. We are still sitting at resistance. This candle here is pretty bearish looking. However, if you get some change in direction, meaning a close outside of resistance, that actually could be a signal that we're going back to retest highs. I don't love the chart, to be honest, on oil, but I will watch it to see if I can catch another attempt on the long side. I took one try at being bullish. It did not work out. So I'm looking to try again if I can get a setup on this oil market. Pound Aussie, not a pair we usually look at, but let's just look at it for the chart sake. Pound Aussie. Pound Aussie seems like it's having some nice moves here. Broke out of resistance longer term. retested it even. Again, big break, pullback, retest, jumping up. Yeah, that's a clean chart. I don't see any entries for me here, right? There's nothing I can, the move has already kind of played out. If I was watching it at this time, perhaps I would have looked at it a little closer, but it's kind of leaving us behind pretty quick. US 500. Yeah, let's look at this S&P move. Guys, S&P is at a key level. Middle Eastern conflict stuff, spiking oil prices. Yeah, a little bit, I would say, for sure. I mean, clearly in the last few days. S&P sitting at 47.10 at the time of us being live here. Buyers have stepped in the last few times we've been here. I'm very, very curious to watch how this level reacts. Seems like we've started to try. You can see we've consolidated here more. I mean, notice something about this price action, guys. Prices are sliding down, but then consolidating here, right? So they're at the very least giving bulls a shot. You know, it seems like the market, the auctioneer, as the market is, the auctioneer is saying, do we have any buyers in this area, and hesitating at that price level. But I would say, guys, be very careful because, you know, I execute my trades primarily off of the 4-hour chart. And this 4-hour chart still looks ugly. Yes, we are at support, but take a look at the daily. I mean, if you take a look at the daily chart here, I mean, I think we have more room to pull back. This market had a massive run up. And I think that perhaps in the new year, we're seeing a little bit of 2024, you know, profit taking, perhaps just a little bit of a stepping back and saying, well, you know what? It was such a phenomenal end of year rally, and there are still problems. The problem I see with the indices right now, and I am a bull, I keep clarifying this, the bullish case was almost too strong going into the new year, as in like there was no bearish case. And I find it really disturbing when there is no bearish case in the market. I know that sounds weird I mean, there was a bearish case, but it was a whimper compared to the wailing of the bulls, right? And I was one of the bulls, so I'm you know, happy that I was. But I started to realize, you know, hey, what's a little bit concerning is that people were getting so bullish. And in fact, I can show you that data. Let me show you. This is a great opportunity to show you this new indicator that we're working on. This is the AAII Investor Sentiment Survey. And what we can see here is that it surveys a lot of investors and asks them essentially, what's your outlook on the market, bullish or bearish? And here's what was concerning to me is look at this. This is before the stock market rally. This is after the stock market rally. The white line represents the bullish to bearish spread. You can see that the market got fantastically bullish. And that was right around the time where I exited my position. I took profits, and I'm feeling really glad that I did that because obviously the market has dropped since then. But it's something to consider. When the whole room is bullish or the whole room is bearish, maybe it's time to either take profits or at the very least trail a stop in, which is what I did. And that ended up being what I think to be a decently good decision. Prices are trading lower than where I stopped out. Am I still a bull? Absolutely. But I like when there's at least like an even playing field between the bulls and the bears. I don't want to see a market. I don't want to be a buyer amongst a herd of buyers. I'd prefer to be a buyer among, you know, kind of a marketplace. There's bulls, there's bears, there's upside to both sides, essentially, if that makes sense. If that does make sense, type yes in the chat really quick. Just let me know. Again, this new indicator that we just added, the AAII Investor Sentiment, I find it very, very cool for understanding risk sentiment. By the way, these update each week, so you get weekly updates, weekly surveys where we can see what market participants are thinking. Are they bullish? Are they bearish, etc.? I think it's very, very cool. So yeah, that if you have the Edge Finder, we just added that as a tab so that you can just quickly view that anytime you'd like. Cool. By the way, guys, I should take a moment to plug the Edge Finder. We're a software company out of Atlanta, Georgia. Transparently, that's how we support all of the content, the streams, the tools that we build. We offer copies of what we're building. If you'd like the tool that I'm using right now to do tons of market research like I do in my videos and streams, you can currently get a huge discount if you shoot us a direct message on our website. We're doing a New Year's sale, and you can get access to a copy of this for a massive discount if you shoot us a direct message right now. So we've got the link here. Boom, there it is. Send us a direct message. If you message us while we're streaming, we'll get you that super big stream discount sale on the EDGEFINDER. If that's something you've been considering getting, if you're looking to take your trading to a new level in 2024, I highly recommend checking out our tool. We work day in, day out in building the best market data that we possibly can for traders. And obviously we use it in our own trading every day as well. So it is, a very valuable resource to my own trading, and that's why, of course, I sell it. I only sell things that I genuinely believe and use myself. So yeah, Nas is sliding. Let's have a look. Nasdaq just cannot catch a break, it seems like, and this chart just looks bearish. I mean, there's not, as much as I love the idea of being a Nas bull. Let's take a quick look, see if we can see any. Is the tech? Yeah, it's the tech sector, guys. Tech sector under heat. And take a look at this. This is the consumer discretionary. That's another area of the market that you want to watch. Consumer discretionary and technology stocks, which of course these are components. Many of these stocks are components of the NASDAQ, right? We like to look sometimes at the sectors specifically. If you're going to be an index trader, I think looking at sectors can be very useful stuff. But look at that NASDAQ, does not want to quit to the downside. US 30 still, however, impressive resiliency. Look at how, yeah, it's come down, but look at this. Let's do a little quick comparison, guys. The Dow stocks are down at their peak here about 1.11%. Meanwhile, what's the NASDAQ down? The NASDAQ is down 4%. So you can see safe stocks, the Dow, are outperforming by a wide margin as we kick off the new year. Let me clarify something also. If you're an FX trader and you're talking about US 30, let me just be very clear. US 30 is absolutely not less risky than NAS due to the way that forex brokers who offer CFDs trade or offer US 30. US 30 is incredibly leveraged. The leverage that forex brokers, the way they contract size it, you're trading like $36,000 minimum worth of, or $37,000 minimum. Like you're trading that whole price in every single move. It's absolutely crazy trading US 30 on an FX broker. I think unless you have a huge account, I do not recommend that personally. If I'm going to trade an index, I trade it through ETFs as a US client. You can also do futures. If you're somebody outside of the US, you can trade, you could trade SPX 500 on FX brokers. Usually that CFD is much more reasonable. But yeah, the NASDAQ size and the Dow size are almost too big for even good sized accounts. Yeah. Do you offer a trial on the A1 EDGEFINDER? Yes, we do. If you'd like to get a trial, we'll drop a link really quick here to that trial. It is available on our website. Boom, there it is. We got an EDGEFINDER trial link. Let me just be upfront with that. We have a lot of people. It's a new year. We had a huge pileup of EDGEFINDER trials, so it may take us a few days to get you a trial. However, let me offer you another thing to consider. If you are somebody who you are considering the EDGEFINDER, but you just have a few questions, or you'd even like to set up a call with someone on our team, here's a way you can do that. We'll send a direct message here. If you click this link, we'll just drop it in the chat again. Click this link. It'll take you to a place where you can actually have a conversation with a real person on our software team about the software, the pros, the cons, what the software can do for you, what it cannot do for you. We try and stay very transparent about what our software does for traders. It's not a holy grail system, but it massively helps you to scan a huge amount of market data in a very quick period of time. For example, a lot of traders love to look at the COT data. We added recently the smart money indicator, which is sometimes working, sometimes not, as we still are kind of tweaking it. However, it shows you, here's a really cool indicator. It shows you the net positioning of COT or institutional money versus retail money. And we can see the difference is pretty interesting, right? So for example, like Euro right now, big money, has been very long on the euro. Meanwhile, retail money has been very short on the euro as it's rallied higher and higher, and now seems to be potentially shifting back the other direction. Might be something to keep an eye on. But this indicator, you can select any chart you'd like. If you trade gold, if you trade S&P, you can select those things yourself and go through the smart money indicator anytime you'd like if you have a copy of the software. So again, last call on that. If you do want the New Year sale, send us a direct message on our website with that link that's in the chat, and you can ask someone on our team about it. Real quick, guys, we're going to now take a break, thank our sponsor, and then we're going to come back with Miko and Marco for our first technical Thursday episode here of the year. I'm excited for it. We're going to get into some charts together and talk a little technical analysis coming in right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, and we're back with Miko and Marco for the first episode of Technical Thursday of the year. Hey, guys, Happy New Year. Welcome back to the show.
Hello. Happy New Year.
Good to have you guys both back, and hope you're well rested, ready for 2024. Have you guys been trading already, or you kind of sit out the first week? How do you take the new year?
I haven't placed the trade yet. I'm still waiting for my debut trade. I'm on the sidelines. Few pairs looking interesting, but yeah, I haven't found anything yet.
Okay, cool. And Marco, what about you? Are you any trades yet?
Mm-hmm. So I took an NJ sell at the last week of December, and then I was holding it through the New Year's actually, and it ended up being like an 8% winner. So it was a very, very nice setup. And currently in a long trade as well on the Aussie and the Japanese yen. So usually January is very active for me.
Very cool. Awesome. Well, yeah, and Miko, maybe we can find that trade together here today. I know the dollars is kind of confusing me right now. I mean, it's been strong. I've been a bear, so we'll try and get into that. But maybe, Marco, we'll start with you while you're on the subject of trades you're taking. If you want to just kind of go through some of your charts that you're watching, and we'll let you take the floor for a minute.
Sure. So starting with EU, currently I'm looking at this push right here, but that's the only thing I'm looking at. Seeing if maybe it will continue trending up like this, and then I'll be looking to buy potentially, but nothing interesting forming just yet. EJ definitely looking nice. So depending on how this closes, if it pushes up a bit more, shows a clean close, my order will be on for a break and retest. So a retest of this level. What am I seeing with this one? Well, I'm seeing a large impulse pullback with no shift in momentum, and then a nice push to the upside as well. So in 10 minutes, we'll see if I'll put an order in or not. AU, Aussie US dollar, for me, it's ranging around inside of this major high and the major low. So I'm leaving this one alone. AJ, I'm in a trade. So in a long trade from here, I was a bit hesitant on this one. So I did not want to take it in the beginning, but I did debate it, and I do think it's a good setup in the end. I'm seeing this large push, pullback with no shift in momentum, and then a nice continuation to the upside. What worried me is overall that it was kind of in this huge range, but I do focus on only the last couple of days of price action, which is my main rule. So decided to take the trade here. Pound US dollar, not seeing much, seeing sort of this V formation when I zoom in a little bit, but I'm leaving this one alone. And New Zealand Japanese yen, another opportunity to take a trade, but I did stay out of this one as I saw a bit of selling pressure in this one candle. And again, I only focus on, let's say, the last couple of days of price action. Currently, it's trending up, showing me an established uptrend. So I am interested in looking for buys. Let's see if we get another push up, and then I'll be looking to buy. Japanese pairs are definitely on the watch list. Dollar pairs are, for me, sleepy for now, so I'm leaving them alone.
Okay, fair enough. And Miko, I guess that as he ended on the dollar, maybe you can pick it up there. I'm curious what your thoughts are. I personally, just to jump in front, I mean, I was pointing this out earlier. Dollar index on the daily still looks weak, but the 4-hour, the lower time frames are looking pretty strong. So I'm wondering if those two forces are going to collide, and I guess who wins in that scenario. But dollar index was super bearish going into the end of the year. Perhaps the new year we're kicking off with a little bit of an uptrend for the start, but I don't know. What do you think, Miko? I mean, take it away. Whatever dollar charts you'd like to look at.
Yeah, I mean, I'll take a look at the DXY since that will kind of encompass dollar the best. But yeah, kind of in the same ballpark as you. On the higher time frames, we have actually been in a more or less of a range really with dollar. We haven't really gone anywhere for most of 2023. Kind of just been up, down, up, down. We had a nice downtrend there. We kind of broke out of that and we came back into another one. So overall price is actually kind of sideways. So I have kind of marked up this level here because this is an area where price keeps rejecting, which kind of makes sense where we have seen a bit of dollar strength in the past kind of few days or so. So longer term, I am still pretty dollar bear. I do think eventually we'll probably continue the path to the downside. However, it's just a little bit too close to these areas. I kind of want dollar to pull away a little bit first before I look to sell. And that kind of does translate to how I'm looking at Euro USD, for example. So again, we're coming to a big level here, not looking to buy Euro USD just yet. It would be nice if we come a little bit further down, closer to these areas. I'd actually rather be a bear in this market and look to short. Not really seeing any opportunities for myself just yet, so I'm keeping an eye for it. But I'd rather be looking to short Euro USD. I'd rather be looking to short pound USD, and same with Aussie dollar coming to some big areas, as we can see back in there again. So from a trend perspective, dollar isn't really too clear. So I would definitely agree with you, but we've hit some areas where maybe you're seeing some profit taking and price kind of retracing a little bit. So I'm not really looking to trade unless I get a bit more information, but I'll see what we can do at these areas because there might be some nice shorter term sales for me to take advantage, or maybe some shorter term dollar strength. So that's kind of how I'm looking to tackle dollar at the moment.
Okay, fair enough. And Marco, last time we spoke, we talked a little bit about you were going to look at gold a little bit as a possible candidate for trading. Did you ever get a chance to do that? I know holidays ended up being more crazy busy than I thought they were, but or they would be. But did you get a chance to look at gold at all? And if not, either ways, I'm curious what your thoughts on gold are, just in the current environment.
Yeah, so I did decide to focus fully on the new entry on the current 6 currency pairs. So I did a lot of research on that, and it was a success in the end. But gold I have not yet analyzed. Let me check it out. So on the 1 hour, I'm seeing this nice push to a downside, some definitely strong selling pressure, but then buying pressure also kicked back in right here. So yeah, for now, I would sit on the sidelines for gold, to be honest with you. But also right here, I can see some nice bullish pressure legs, which can definitely be exploited. So I think gold is a good candidate for somewhere in the future for me to research it. But if I had to have a bias right now, I would say it's going to range around because I'm seeing selling pressure and then I'm seeing buying pressure as well. So I'd expect something like this inside of this area.
Okay, fair enough. Yeah, it definitely has had a big change in pace at the very least from the turn of the year, with that dollar kind of strengthening a little bit. Miko, what do you think on gold? Are you does it look strong, weak? What are you thinking?
Yeah, I'm still overall a gold bull, but it's just not really at good prices for me to position myself long at the moment. From a higher time frame perspective, we're still trading this big level resistance here on the weekly chart. So I'm kind of trying to stay away from buying here. Unless if we break through, things get interesting. But at the moment, we're kind of struggling, especially with the previous weekly candle. So we're kind of struggling at these prices. So if anything, I would only be looking to short. I'd only be looking to short gold for the time being. And I wouldn't look to try and push it too far because, as I said, I'm still looking for gold to eventually take out that wick high at 2150. So if anything, there might be some nice sell opportunities since we are still in that big level rejecting it. There might be a nice short for maybe next week potentially if we can creep up a little bit higher. We'll see what NFP does on Friday. But I'll probably be looking at something like that from gold. That's probably the best I can see for now, but I'm kind of still looking to buy, but I don't really have anything set up for that bias just yet.
Yep, fair enough. And I'll just show my chart again for those of you guys who missed it earlier in the stream. From a price action standpoint, gold looks really struggle central for me. We've really broken through a couple of key levels of support. I actually tried to buy it over here and it did not work out. Well, actually, sorry, I bought it like over here, thinking that, okay, this level of support held very nicely. We could see this thing overall kind of resume its trend. Maybe it's just taking a pause. And then sure enough, it dropped through that level. And now that very, kind of momentum has continued to the downside. I am still, same with you, Miko, long term, I'm still a bull, but I'd like to see price action actually give me, the green light to take trades. I'd like to see, breakouts, retests, and levels of resistance start to become support. I'd like to see momentum kind of flipping towards the bulls. One of the big reasons, again, just quick nod to the fundamentals, is that rates are still expected to come down this year. Inflation is cooling still overall. And unless if that's kind of what the base case for what's going to happen in markets, that environment should be, historically speaking, a very positive one for gold. It's why we had a nice run up prior to the end of the year. And I think that trend could kind of find its way back into the narrative again. So I am looking on the technical side for the actual signals to show up for me to start trading that. But definitely an interesting one to watch close going into, the first couple months of the year. Also, we spoke last time you guys were on about seasonality a little bit. And I think that, seasonality is one of those that kind of it's like a bridge between technicals and fundamentals because it is observed through purely technicals, but fundamentalists love to talk about it too. Anyways, seasonality for gold in the last 10 years has been very positive in the month of January and in February. So it'll be interesting to see if we get that this year. Now, of course, this is not a guarantee by any means, nothing in markets is, but understanding that, okay, historically speaking, they are more in the last 10 years, observably more bullish in the first couple of months is worth considering in analysis. So I think we'll have to keep an eye on that as we trade through January, February. So like I said, I'm looking for breakouts if we can get them first couple weeks. I guess next question here for you guys is the indices are selling off. Marco, what are your thoughts on any of them? I think we spoke last time and you mentioned if you were going to look at one closely, you'd probably talk about the S&P, right?
Yep. So let me check out the S&P. Oop. I think this is the wrong chart. This one should be better. Okay, so on the 1 hour, what can I see here? Yeah, in a downtrend, in a short-term downtrend on the 1 hour chart, definitely some large bearish legs and a little bit, so signs of some bullish pressure in this candle and this candle, but overall it's just correctively going down. So you're out of your position, correct, Nick?
I am. Yep.
So definitely I'm seeing a shift in momentum on this 1 hour. On the daily, a large correction on the daily as well. If I just measure this momentum and compare it to the legs going up, so definitely some large move, definitely a large move, and I would not be surprised if this goes down a bit more. Now it kind of also broke this major low as well, or is close to breaking it. Once it breaks and breaks that structure, I do expect this to be a larger correction, and the momentum is definitely for it to go down a bit more.
Yeah, I think this is where lower time frames can really be useful too, especially because you're seeing that momentum really pick up on the lower time frames. But if you were to only look at the daily chart, it can be a little bit deceiving because it's like, oh, it's not too big of a sell-off, but you can really see it happening in the lower time frames. And as you mentioned, if this key level breaks, I think at 4,700, that could be a cue that the S&P has more room to pull back and maybe give back or kind of take a breather from all those gains that it made end of 2023. Miko, what do you think? Any of the indices, I guess S&P, NAS, or Dow? What do you? Any thoughts on those?
Yeah, I mean, from S&P, I still do like this to the upside because US 30, US 100, we did create higher highs with those. So I would expect S&P to follow suit and do that as well. So the down move we're seeing now, I'm looking purely as retracement. It is looking a little bit sharp. We're seeing some nice bearish momentum, but I would expect this to eventually exhaust and find its next leg to the upside to go and follow what US 30 and US 100 did. So for this one, I mean, some nice areas to potentially pick up some longs down here around 4,600. There is a big level of support at this area, which I'm not too sure if it will hold, but if that does break, I think it would just give a bigger retracement and better buying opportunities, in my opinion. US 30, US 100, I kind of don't have too much to say about at the moment because they've just pinched the highs. So I'm kind of less interested in looking to analyze them too much because when we create highs, we potentially see bigger pullbacks, or maybe price wants to push high as well, and we don't really have a lot of structure to trade. But S&P does look interesting to me for some more upside. So I think we could be seeing another leg higher, but maybe some retracement first.
I generally agree with that too. And one to point out of the three is the NASDAQ has really just gotten destroyed. I made a point earlier in the show that, you know, the Dow, which is comprised mostly of more of the safe, you know, super giant companies that everyone knows, like Walmart and, you know, Coca-Cola and Apple. It's like the super safe one of the three in terms of composition compared to the NASDAQ, which is much more tech stocks and growth focused stocks. You can see a huge divergence in the two, and actually matters to currency traders as well, because what this is telling us is that a massive sell-off in, well, not massive, but, you know, a comparatively big 4% down on the NASDAQ compared to like a 1% correction on what we're seeing in the Dow at its peak sell-off. What that tells you is that traders, investors seem a little bit more attracted right now to safe haven areas. And perhaps that has something to say about, you know, why the dollar is making a little bit of a move higher, and, you know, definitely can carry over into the currency market. That's why, you know, I made the point early in the show today that I think, you know, if you're really, you know, a trader, even if you don't trade these things, and I appreciate this is why I ask you guys to do these things too, it's important for traders to see that even if you don't trade a particular market, understanding generally what it tells you about other areas of the market can be very, very useful in getting a full look when you're doing your analysis, even if you don't actually execute trades on the assets that, you know, we may talk about. So I want to thank both of you guys for coming on to the show, sharing your insights, taking a look at different charts here with me. And we love doing these technical Thursdays. I think the audience does as well. I have also had you guys' links dropped in the chat here. For those of you guys who are watching with us live, just check out the YouTube chat. Make sure to go subscribe to Miko and Marco on their own YouTube channels. They put out wonderful content themselves. 2024 will be better with them in the picture. If you are looking to get better at trading, make sure to follow these guys, keep up with their journeys. And Miko, Marco, thank you guys both for coming on the show.
Appreciate it.
Thank you so much.
See ya.
See you next time.
See you guys. Yep, always good to do those technical Thursdays, guys. It is kind of a good refresher for me too, because I typically, if just left in my own vacuum, I would talk fundamentals all day long. So I kind of like being pulled more towards the technical chart for a little bit, and taking a look at that with Miko, Marco. I feel like, you know, they have plenty of experience to share with both myself and the rest of the audience. So shout out to them for coming on, and please, as always, make sure to go support our show guests. We very much appreciate them coming on. This has become one of the most informative streams on YouTube. Thank you very much. I'm very, very pleased to hear that sort of comment. I've been getting a lot of comments, guys, and I just want to say thank you very much for the support. This year, I've really tried, myself and the producers, editors on the team, we've really been trying to take a fresh look at this content and level it up even further. I mean, 2024, I hope that you'll stick around with us the whole year. If you're an aspiring trader, I will, as always, be putting out every ounce of quality content that I possibly can on this channel to help traders reach more of their full potential. And, of course, I learn a lot doing these videos. Every day I'm taking notes down and I'm prepping for videos and I'm coordinating, what I'm going to say on streams and content. And then on the producer side, we're bringing on talent from other places in the world that can contribute to this show. So we are doing our very best. If you want to support us in that mission, here's a few things you can do. Number one, make sure to hit the thumbs up button and subscribe to the channel. Number two, make sure to join our free Telegram channel. If you have not already done that, we're going to drop a link here in the chat while we're live. You can actually join us for more free content in our free Telegram. Again, it is genuinely free, and we put out content that is of value, just like we do on the channel and videos every day as readable content. So if you're a reader, if you like to get chart ideas sent to you, if you like to read up on the latest, if that would be helpful to you, I've got people on my staff who are doing that for the community. Again, totally free. Make sure to join that if you have not already. So yeah. What would be best for a new fundamental trader? Gold membership or the EDGEFINDER? Both look amazing. AOD gaming here or games. Here is what I'd say to you or anybody else who is curious about that. We have a couple people on our staff who can help you to answer that specific question. If you shoot us a direct message on our website, you can chat with someone who can help you to find out whether or not a membership is right for you, or if you're looking more for software. We can get you both too. We bundle them super discounted if you do decide to get both. You can get access to all of our market data, indicators, tools, as well as the membership, which gets you coaching webinars. You can chat with the team. You can see the trades we're taking. You can, honestly, you can package both of them if you'd like. We'll drop that link here in the chat if you guys don't mind on the producer side for AOD Games or anybody else. If you would like to join us, take your trading to the next level. I'm telling you, it is the place to be. No nonsense, live accounts, no fake stuff. Come join us. Send us a direct message if you want to join. We'll get you a nice discount here, by the way. It is our New Year's sale, and you get a nice discount off any of our products that you'd like, and we can even bundle them for you if you decide. So click that link, take advantage of those discounts. And with that said, guys, have a great rest of your trading day. We'll see you back next time. See you guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. Have a great Happy New Year and trade safe.